Hello and good afternoon. You tune into Market Fata Fata. I'm Equitas Small Finance with me is Nuputalwar, and we're joining you from Suzlon Studio in the next half an hour. We'll take you through all the top buzzers in the trading session. And speaking of the buzzers, let's first talk about the action in the primary market and the new kid on the block. RD Industries that is set to debut next week with a 425 crore IPO. The issue comprises a fresh issue of 320 crores and an offer sale that is worth 105 crores. The company plans to utilize 220 crores from the proceeds towards working capital requirements and 20 crores for the repayment of borrowings. My colleague Sajid spoke with Sandeep Agarwal, who's the CMD, and Nikunj Agarwal, who's the whole-time director of RD Industries, to understand the roadmap ahead for the company. Let's listen in.
We are a lead recycling company based at out Tirupati with the capacity of 156,000 metric tons per annum. Our business model is to procure battery scrap, lead scrap throughout the world and process it at our Tirupati facility. Our product portfolio based in two categories. One is pure lead, second is lead alloys. We are one of the few players having registered with the LME and MCX. We are one of the exporters in Southeast Asia, and our key strength is this: we are very experienced in this business.
Nikunj, give us a sense of the fresh equity that you are raising, 320 crores. Where is it going to be used for?
Overall, we are importing from a lot of like 50 countries and a very diversified portfolio of suppliers that we have. And the fresh issue that is being raised will majorly be used towards strengthening our supply chain for future growth and future working capital requirements, and that is where it's going to be helping us. We'll also be partly repaying our debt to the tunes of 20 crores, and overall the existing 1.25 times debt to equity ratio, which is comfortable, would further we would feel we will be in a better position.
Nikunj, give me a sense of your supply chain here, because you work with old batteries and and recycle them and reprocess them and give it across to companies like an Amara Raja, which is one of your largest customer as well. Give me a sense of the kind of supply chain that is there. How much of that is sourced from India and how much you import?
So we have a portfolio of over 50 plus countries where we are importing from. These end-of-life batteries, which is a resource to us, actually we are able to derive a lot of value in terms of critical minerals, critical metals. We extract them in our facility. Everything comes in containers on the Chennai port, from where we bring it by road to our plant. We process them into various smelting, refining through our state-of-the-art facility. Various processes happen where we make pure lead and lead alloys. And finally, the goods are made into lead ingots, basically, and supplied to manufacturers, over 50 plus customers that we have currently, and over 36 repeat customers we've had as of last year. So that is a broad sense of the supply chain.
Sandeep, give us a sense. You gave us an idea of that, nearly 50,000 odd metric ton of capacity came up only at the end of May, which basically means when I'm looking at your FY26 numbers, it was based on 100,000 odd metric ton of capacity. Are we to understand that your numbers for FY27 will be incremental to the tune of the kind of capacity that you have added at this point in time?
Yeah, we are focusing on the overall execution. Historically, you have seen we have grown well. So we try to maintain, basically.
I'll highlight here how RD is actually one of the very few companies who's both MCX and LME brand approved. That means our refined lead, which is pure lead, is good for delivery in any of the warehouses of LME worldwide and MCX in India. And with our capacity expansion also, we are at the forefront of better utilization in the that we feel as per our past performance. we want to be ready with larger capacities when we go to OEMs, that we're a sizable player, and if any large order converts for us, that would be we would be ready.
What is the kind of order book that you have currently in Nikunj going into FY27?
We have a pretty strong order book, and the overall industry works on an annual contract kind of basis. So we're focusing on the same. In terms of our last year production, we did around 69,000 tons, which was increasing on an absolute basis from FY25 was at 45,000. So we feel that this is a growing number for us.
And how do you look at the lead prices movement? How has that moved in the last few years for you?
So for lead prices, basically, prices. It's a commodity. Prices, can move anywhere. Our focus remains on sourcing efficiently, hedging the scrap price, and then selling it, thereby mitigating any kind of price risk or price movement.
And moving on to Adani Ports, whose CEO Ashwini Gupta says the company's diversified business model continues to drive growth, with domestic ports remaining the earnings backbone. Now, while international ports, marine and logistics are emerging as key profitability drivers, now the management remains confident of achieving its ambition of 2031 goals. Listen into what he said.
Our domestic ports business remained a strong growth engine, delivering double-digit growth while maintaining an industry-leading EBITDA margin of 74%. This performance comes even as we execute India's largest private port capacity expansion program, increasing capacity from 653 million metric ton today to 1 billion metric ton by 2030. Our international ports are emerging as a significant growth engine. International ports delivered record revenue of rupees 1,747 crores, up 80% year-on-year, while EBITDA surged 256% year-on-year, driven by the addition of NQXT Australia operations and ramp-up of the CWIT Sri Lanka terminal. Cargo volumes nearly tripled to 22.8 million metric ton from 7.7 million metric ton a year ago. The increasing contribution from higher margin NQXT, Australia and CWIT Sri Lanka resulted in a sharp improvement in EBITDA margins to 41.8% compared to 21.1% a year ago. In logistics, our focus on scaling asset-light businesses is delivering results. Truck revenue grew 26% year-on-year. International freight network revenue rose 28% sequentially. Return on capital employed improved from 6% to 10% in FY26, and as asset-light offerings scale further, returns will continue to strengthen. In our marine business, revenue increased 67% to rupees 901 crore and is making strong progress internationally, with revenue from vessels operating in international waters significantly exceeding domestic marine revenues.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you buzzers on the other side. Stay tuned. Welcome back. You tune into Market Fata Fata. We're taking you through all the stocks that are in news on the back of news floor, on the back of technicals. And now on the technicals, we're joined by Lakshmikant Shukla, who's a technical analyst, institutional research, yes, securities India, who's now joining us. Hi, good afternoon, Lakshmikant. Thank you so much for joining us. Let's get going with the show, and let's take the first stock that's in focus, and that's Tata Capital. That's in focus today. An earnings beat that's coming in on Tata Capital, and that was driven by better fee income margin growth, and despite the degrowth in the auto book, we did see some strong traction coming in on the margin front as well. That should get better as the mix improves, and the consistent improvement was also seen on the asset quality front. Now, the net profit for Tata Capital rose almost 56% to 1,547 crores in the quarter, as against 989 crores on a year-on-year basis. The sales also saw an uptick of 15% to 8,821 crores, as against 7,660 crores on a year-on-year basis. We have brokerages like Nomura that's maintaining a buy call, and they've revised the target price to 415 from an earlier 400. So there's an upgrade coming in from Nomura. Also, MK has is maintaining an add, and also the target price has been increased to 410, and Nuvama is also maintaining a hold call with the target price at 400. So on the back of that, the strong set coming in and brokerage upgrades that we saw coming in for Tata Capital, that stock is up in a way more than 2.5%. Well, let's move on then. Lakshmikant, you've picked out Aurobindo Pharma for us. Tell us on the charts, what are the levels you're tracking for Aurobindo?
Good afternoon to both of you. Thank you for calling me on your show. Now, talking about Aurobindo Pharma, as in today's session, we have seen positive upside move in pharma, which still continue to lead the charge in the market. And Aurobindo Pharma is adding to that strength. The stock has been trending higher, consistently respecting its 20-day SMA. A fresh breakout occur from its falling trend line, backed by healthy volumes, has improved the setup further. Daily MACD is about to give a bullish crossover, and RSI comfortably approaching toward the 60 mark. So I think one can go long in this stock around the zone of 1,570 to 1,580. Can expect the target of 1,680 while keeping the stop loss of 1,530 on the downside. So I am expecting positive momentum in Aurobindo Pharma.
All right, now I've picked Asian Paints. Now, Asian Paints, of course, is in focus today as the company is scheduled to announce its FY27 earnings with a keen lookout for its demand trends. Now, the counter has been just trading up and up, in fact, at 2,756 currently. As the street watches its FY27 earnings, the ET Now poll is penciling in a volume growth of about 9 to 10%. Now, price hikes are also expected to support a growth in its profits.
All right, let's move on to the next counter that is in focus, and that is DCM Shriram, and that is also an earnings candidate. Let's take a look at the scorecard then. If you look at the scorecard, as far as growth is concerned, strong growth coming in for DCM, and we had PAT also that was higher than what the street was penciling in on the back of exceptional gains. Now, let's take a look at the numbers in the fine print. So the profit stood at 693 crores versus 113 odd crores. The revenue also saw an uptick of 9.6% at 3,785 crores. The EBITDA saw an uptick of 10.5% and 336 crores. And the margin stood at 8.9 crores versus an 8.8 crores on a year-on-year basis. So flattish moves as far as the margins are concerned. But the highlight was that the PAT included a positive tax adjustment of rupees 474 crores, and the normalization PAT for the quarter was 147 crores. That was up 30% on a year-on-year basis. Also, the growth was led by Americas and the European business, and the BFSI and the CPGR continues its strong momentum. Good set coming in for DCM Shriram. It has cooled from the morning. It's actually hovering towards the day's lowest point, but nonetheless holding out in the green. Let's move on then. Lakshmikant, coming to you then. You've picked out GAIL for us on the charts. Talk to us about the levels you're tracking for GAIL. In fact, if you look at GAIL, it hasn't really done much. It's been very range bound in the last 1 month. Do you see some bit of attraction coming in on this counter now?
Yes, you are pointing right that from since so long it has not done really well. But I think this stock has been consolidating over the past few sessions. It has built a strong support base above its short-term and long-term moving averages. Now the stock has picked up a little bit movement on the upside by breaking its recent trading range on the daily chart. With downside appear well contained at current levels, the setup offers a favorable risk reward for short to medium term trader. We recommend accumulating GAIL around the zone of 173 to 175 band with a stop loss of 167 where its 200 DMA is placed. So I think as long as it holds this level, we could expect the target of 188 on the upside.
All right, now the next pick is Hindustan Unilever. Now, in the FMCG sector, Hindustan Unilever, of course, again in focus as it has made a comeback after yesterday's sell-off. Now, it's been trading quite well today, nearly up about 4.5%. So it's doing well. Now, this is, of course, despite the weaker than expected growth in volumes. But the market perhaps is reacting to the strongest sales growth that we've seen in 13 quarters. So, in fact, it's also on the uptick as brokerages this morning gave it a thumbs up. In all, the stock looking quite good today.
Right, let's move on from HUL. That's trading up 4.5% to INOX Wind. That is in focus on the back of an order win. It's a repeat order. The order is valued at 1,600 crores. And if you look at the scope of the order, that includes WTG supply, EPC, and long-term O&M services. The project is slated for commissioning within 24 months of the letter of intent. INOX Wind's total order book now stands at 4.7 gigawatts, diversified across PSU, the IPPs, and CNI customers. In the back of this big order win, INOX Wind is up and away with gains of 1%. But let's move on. Lakshmikant, coming to you. Hindalco is what you have picked out for us on the charts. How does Hindalco look like to you, and what are the levels you're tracking here?
See, it has seen a decent amount of correction since it made a high of 1,177, and then after we have seen consistent decline in this stock. But now Hindalco managed to find strong support around its 200-day SMA, which is indicating that short-term weakness is well absorbed at lower levels. The recent sharp rebound from this zone in today's session, supported by noticeable rise in trading volume, suggests a renewed buying interest and improving market sentiment. So encouragingly, the stock is now trading above its 20-day SMA, reflecting a positive shift in the trend structure. In addition, most trend oscillator and leading oscillator are mostly in a bullish trajectory, supporting the case for further upside. Hence, we recommend to buy Hindalco around the levels of 950 to 960 while keeping a stop loss of 925, and can expect the target of 1,015 on the upside.
All right, now let's turn our focus to Phoenix Mills. The shares trading down today fell as much, in fact, continuing to fall as much as 5.5%, currently trading at about 1,912, nearly 1,913 actually. Now, this is despite the real estate developer reporting double-digit growth in revenue and net profit for this quarter. Now, the decline seems to have come as investors reacted to mixed cues.
All right, so let's move on to Equitas Small Finance Bank. That is also in focus on account of its numbers. If you look at the numbers, then the net profit of 100, we did see the profitable that has Equitas Small Finance Bank that has returned to profitability in the first quarter of FY27. That's reported a net profit of 184 crore that was aided by healthy core income growth and a sharp decline in provisioning. Now, the bank returned to profitability in the first quarter, like I mentioned, and also we did see, as far as the net interest income is concerned, that rose 30.9% on a year-on-year basis to 1,029 crores from an earlier 786 crores on a year-on-year basis, while the operating profit increased 405 crores from 315 crores, according to the announcement. And of course, we did see the asset quality that improved sequentially, with the gross non-performing assets declining 2.36%. And also we had the net NPA that stood at 0.7% compared to 0.6% in March quarter. The bank said that the credit cost fell sharply to 1.37% from an earlier 6.48% on a year-on-year basis, and the provision coverage ratio remained stable at 71%. But let's move on and talk to Lakshmikant about the stock that he has picked out for us. He's picked out REC for us. REC, talk to us about the chart and how does REC look to you? I mean, it is right now trading with gains of more than 1.5%. But also in the last 6 months, it has really not done anything. Very flattish moves or very range-bound moves for REC also. So do you see any recovery coming on the stock?
Yes, I'm seeing recovery in this stock because this stock has displayed strong resilience by taking support at its 50 and 100-day SMA, indicating that recent weakness was comfortably absorbed at lower levels. A sharp rebound from this support area, accompanied by rising volume, signals renewed buying interest in this stock. With this stock now trading above its all key moving averages and delivering a cup and handle breakout on the daily chart in today's session, which is suggesting that trend looks firmly positive. So I'm expecting bullish move in this stock. One can look to buy on dips around the zone of 368 to 372 range with a stop loss of 355 and can expect the target of 400.
All right, now let's look at another stock that we're focusing on, SH Kelkar, another counter that is on the upswing. Now, the scrip has been surging after strong earnings. In fact, it's seen an upswing of nearly above 12% rather, trading currently at 161 levels. Now, the company shares surged after reporting a massive 76% jump in consolidated net profit for the first quarter of the fiscal. And Lakshmikant, if you could come back to you, I think you've got Havells India in focus, so tell us a bit more about that.
See, since last few weeks, Havells traded in a broader range of 1,225 to 1,115 corridor, consistently holding above its 20-day SMA. That is a clear sign of buying interest. Yesterday, stock broke out above this range with a strong bullish candle. RSI is approaching towards 50 on daily charts, which is again showing positive momentum, weakening bearish MACD while giving positive crossover on the daily chart, also showing strength in this counter. So I am expecting upside move. Considering this constructive price structure, one may consider it to initiate long position in Havells around the levels of 1,230 to 1,240 for the target of 1,340 with a stop loss of 1,190 on the downside.
All right, thank you for that one. Now, the final stock that we're focusing on is Paradeep Phosphates. In fact, that stock rallying on and on. Strong double-digit earnings growth backed by higher sales. It's also seen resilient operations and an expansion-led growth outlook. The stock has been in the top gainers today, currently up about 13.5%, trading at 158. Well, so that's all we have time for right now. Thank you, Lakshmikant. You're watching Market Fata Fata, but coming up next, we'll get you the latest on ET Now. Thank you very much for joining us.